With this proliferation of currencies, there doesn't need only to be official sector currencies. A currency can be whatever you and I decide it can be. It can be physical gold or, coming soon to a wallet near you, a gold token. We will see this in the near term. It is highly unlikely that this currency will enjoy any official backing whatsoever, and that doesn't particularly matter to me. I'm a consumer of currencies, and I love the fact that a whole bunch of people are out there trying to invent new ones which will serve me better. A physical gold token, backed by reputable organizations, 100% secured by gold and redeemable for gold, I think would be a superb currency. And I believe that it's technologically feasible now, and I think it will occur 2 or 3 years from now.
Gold has historically been a cornerstone of monetary systems due to its resistance to corrosion, scarcity, and malleability. It has evolved into a standard for measuring wealth. The formal gold standard was adopted in the 19th century, starting with Britain in 1821, tying currencies to gold and providing stability. Today, a return to the gold standard seems unlikely. According to RickRule, governments resist it due to the fiscal discipline it demands and the limits it places on political power. Instead, the rise of alternative currencies empowers individuals to define money. Rule predicts the emergence of gold-backed digital tokens as a reliable way to preserve wealth in an increasingly decentralized financial landscape. Even today, gold proves its worth, particularly during economic uncertainty. It has historically moved in the opposite direction of stock markets, especially during periods of volatility, reinforcing its reputation as a safe haven asset. This behavior strengthens its role in portfolio diversification, and retail and institutional investors recognize gold's enduring value globally. Rule further asserts that gold and silver are currently in a confirmed bull market. Gold is taking the lead, primarily fueled by investor concerns over inflation and the devaluation of fiat currencies. While silver has lagged in the early stages of this cycle, history suggests it tends to outperform gold once generalist investors begin entering the market. Data from Dow Jones Market Data via FactSet supports this trend. Late last month, gold and silver were nearly equal in their year-to-date gains, rising over 14%. However, over the past month, silver prices have retreated by 5.4%, while gold has surged to new record highs, climbing nearly 11%. This divergence reflects the underlying strength in gold's current momentum and potentially sets the stage for silver to play catch-up as the bull market matures. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
You almost certainly need to be prepared for a 50% down move in bull markets. Precious metals are notoriously volatile, and silver is more volatile than the rest. I'm reminded of the decade of the 1970s, where in the beginning of the decade, gold was up from $35 an ounce to $200 an ounce. In early 1975, the Fed, concerned about inflation, raised the interest rate, which cratered the gold price. It fell from $200 an ounce to $100 an ounce in 9 short months. Of course, the Fed lost its nerve because it cratered the bond market and the stock market too. When the Fed reversed course, the gold price ran from $100 an ounce to $850 an ounce. What's important to remember is that if the underlying conditions favoring a bull market stay intact, the bull market will stay intact too, but it will certainly test your patience, your faith, and your bank account in the interim. And I think probably we're due in the near term for a rest in terms of the gold price. It's also worthy to note that silver has not, as of yet, kept up with gold's pace. As long as you say a digital monetary system, not the monetary system, governments will never back their currencies with gold. They will not do it. It imposes a discipline on them. It reduces their power, and people go into politics for power. The beautiful thing about the age that we're living in, Dunnigan, is that with this proliferation of currencies, there doesn't need only to be official sector currencies. A currency can be whatever you and I decide it can be. It can be physical gold or, coming soon to a wallet near you, a gold token. We will see this in the near term. It is highly unlikely that this currency will enjoy any official backing whatsoever, and that doesn't particularly matter to me. I'm a consumer of currencies, and I love the fact that a whole bunch of people are out there trying to invent new ones which will serve me better. A physical gold token, backed by reputable organizations, 100% secured by gold and redeemable for gold, I think would be a superb currency. And I believe that it's technologically feasible now, and I think it will occur 2 or 3 years from now. I think that gold does well during periods of time when people are concerned about the maintenance of their purchasing power in fiat-denominated instruments. So I'm going to keep a substantial position in gold until a few things happen. One, the federal budget is balanced. Two, we have a fiscal regime in place that will handle and service $100 trillion in unfunded entitlement liabilities. Three, until the interest rate on the U.S. Treasury exceeds what I consider to be the real rate of inflation, which I consider to be between 7.5% and 8.5%, and until aggregate federal debt is lower than GDP. Now, if you add those four factors together, it may be that I have to hold my physical gold until the 12th of never. But I don't have any artificial peg in place that says when gold goes to 3,500, I'm going to sell. Or if the gold price falls from 3,500 to 3,200, I'm going to sell. Remember that we measure gold in a floating abstraction called the US dollar. When other forms of savings appear to me more attractive than gold, believe me, I will sell gold and buy those. But measured clearly in a US dollar circumstance, as I say, I'm buying gold to shield my purchasing power from the declining purchasing power available to me in conventional savings products. And until they see those threats disappear, I'll continue to hold my gold.
The global supply of silver has faced a deficit relative to demand for the past 4 years, according to the latest data from the Silver Institute. In its 2024 World Silver Survey, the Institute estimated the global silver supply at around 1.015 billion ounces, while demand is projected to reach approximately 1.164 billion ounces. The Institute also forecasts another supply shortage in 2025, with supply expected to rise slightly to 1.031 billion ounces, yet demand is anticipated to grow even further to 1.148 billion ounces. This ongoing supply-demand imbalance sets the stage for potential price movements in the silver market. Silver could be an even more compelling investment opportunity despite gold's consistent rise to record highs. RickRule, a prominent figure in precious metals investment, underscores the inherent volatility of these markets, advising investors to be prepared for significant pullbacks, up to 50%, even within an overall upward trend. He notes that silver, due to its lower price point and higher volatility than gold, holds more significant explosive upside potential once market momentum shifts in its favor. Furthermore, Rule highlights the risks posed by prominent short positions in silver, which could face severe consequences when the market eventually turns. As silver becomes more attractive to investors looking for growth potential in a volatile market, those holding short positions may find themselves in precarious situations, especially if the market experiences a sharp upward movement. This dynamic presents a vastly better investment opportunity for those willing to ride out the volatility and embrace silver's long-term potential. Let's get back to the interview.
I think that well, first of all, I think this is going to turn around and bite them. I wouldn't have said that 3 or 4 years ago, but I do think it's going to turn around and bite them. The Wall Street guys do what's easy. And for 40 years, beginning in 1982, the US dollar was ascendant and precious metals were descendant. Silver being more volatile than gold, it was an easier thing to short. The second thing is that the silver market is extraordinarily leveraged. Many days, 100 or 200 times the amount of silver available for good delivery trades hands in the futures market. What that means is that it's remarkably easy to short for big people. These masters of the universe create short ladders, going out 3 months, 6 months, 9 months, 12 months, 18 months. Borrow a fair amount of physical silver, sell that silver in the overnight market when the liquidity is the least, so that they can have the biggest impact on the silver market, and then look for the price signal from the physical market to impact the futures market. If somebody is short, let's say $1 billion worth of silver in the futures market, and somebody uses $50 or $75 million worth of silver, they lose, say, $10 million on selling into the physical market. In effect, you're investing $10 million in your loss in the physical trade to make $50 or $60 million in the long-term trade. This works until it doesn't. I have now been through 3 real bull markets in precious metals in my life. And I don't know why it's true, but what I do know that is true is that in precious metals bull markets, and we're in one, by the way, let's not equivocate about that anymore, when the momentum is established by gold, and that momentum attracts generalist investors to the precious metals market, when those people come down into the precious metals market, market leadership changes from gold to silver. Why? I don't know. Maybe because of the lower unit price. But what I do know is that you won't need RickRule to tell you when you're in a silver market. And a short position in a market with the upside volatility that silver has relative to almost any other commodity on the face of the earth, I believe has the ability to deliver truly a religious experience to the short side, irrespective of the structure of the market. These short guys do whatever's easy. I remember in the decade of the 70s, there was a lot of manipulation in precious metals markets to the upside because that was the bias in the market. Wall Street learns thoroughly, but they learn slowly. They do now what made them money for 40 straight years, and they will do it until, like 2008, they learn one of these character-building lessons. I think a central bank digital currency is what our government and most governments would like to use. There has been talk about doing with digital currency what the Zimbabweans did with paper currency, which is to say to put an expiration date on it. And there will be a group of people around there who have no sense of humor for that. I don't see that sort of draconian future coming to the United States right now, if for no other reason that there are 400 million guns in private circulation in the United States, and there's only so much aggravation Americans can take. There are easier ways for our government to steal from us right now than to steal a currency. They can cause inflation, which is very popular. They don't get criticized for it. In fact, they get reelected for it. They can run up debt and deficits, which is a different form of theft. They can raise taxes, particularly on the rich. They don't need to confiscate your currency. They don't need to confiscate your IRA. Doing so would run a risk that passive opposition to the government became active opposition. And the government is aware of the fact that there are 400 million guns in private circulation.
The precious metals market is navigating a critical phase, where supply shortages, escalating demand, and volatile price movements create a complex landscape for investors. Gold, bolstered by its reputation as a safe haven asset, continues to see strong momentum. At the same time, silver, often overshadowed by its more established counterpart, holds the potential for even more explosive gains as market conditions evolve. With a growing supply deficit and increasing interest in silver's price volatility, the outlook for the metal remains promising, though not without risks. Investors must carefully weigh the opportunities and challenges in this dynamic market. Given silver's historical tendency to outperform gold during bull runs, will the metal see a resurgence as investor sentiment shifts, and how should investors approach its inherent volatility in the coming months? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.